Hi friends, welcome to Hemant YouTube channel. Today we are going to learn about loss return. So um, many of you may think that what is loss return? We have learned about return of income or belated return or updated return. But what is loss return? Loss return is mentioned under section 139 subsection 3. So why it was given some preference so that it was included in another section? Actually, the term the term loss return means when any loss is mentioned in the return, it becomes loss return. So why it becomes separate section 139 subsection 3 when 139 subsection 1 is there? Actually, this section says that not every loss can be carried forwarded if it is not mentioned within the due date. That is, for example, an individual, his business loss is 30 lakhs. So since he is an individual, his due date is 31 7 31 July 2022. So loss is 30 lakhs. This 30 lakhs, as all we know, this can be carried forwarded and set off with next year income, and it can be carried forwarded up to 8 years. It can be carried forwarded into 8 years. So if that person has filed return on 31 12 2022, then he cannot carry forward this loss. That means this 30 lakhs cannot be carried forwarded. Only if that person has filed the return of income within this due date 31st July 2022, then he can carry forward this loss. So loss return says that some particular losses cannot be carried forwarded if the return was not filed within due date. So let us learn what are that losses. First one is PGBP loss. For example, a person, as I have previously mentioned, whose loss is 30 lakhs can carry forward and set off this with next 8 years only if that particular person has filed the return of income on 31 7 2022 before 2022. If he has filed after 31 7 2022, then he cannot carry forward his loss. Second, capital gain losses. Any capital gain losses need to be mentioned in the return of need to be filed before the return of income. And third one is owning and maintaining horses. But some losses can be carried forward even though if it is not filed within the due date. That is, if house property loss. For example, house property loss he has 20 lakhs. His due date is 31 7. He has filed the return on 31 10 2022. These 20 lakhs can be carried forwarded for the next year. So this house property loss can be carried forwarded even if it is not mentioned in the if it is not mentioned in the return of income and not filed in the return of income. And second, unobserved depreciation. This loss can be carried forward even after return of income is after due date. And one more question needs to come to in your mind that suppose a particular person, this person is there, he has PGBP loss of 30 lakhs and another PGBP income of 30 lakhs and capital gain of 20 lakhs. So this person has filed return on 31 10 2022. Actually this person due date is 31 7. Since he has filed after the due date, it is known as belated return, and this loss cannot be carried forward, we have said. But can we set off this both? Yes. For the present year, we can set off set off, but we cannot carry forward. That means that 30 lakhs will be lost, will be set off, and a same person has 30 lakh loss, and in another business he has capital gain of 15 lakhs. Can he set off? Yes, he can set off 15 lakhs. And what about remaining 15 lakhs? This will be lapsed. He cannot carry forward because he has not filed the return of income before the due date. So this is nothing but loss return. So continuation of delay. That means, uh, for example, there may be some genuine reasons which may see in our office uh, that client mistake will not be there, their negligence will not be there, but they have not filed the return within the due date, but they have huge losses. Then they can make an application to CAT, Commission of Income Tax, or Principal Commission of Income Tax if their total loss is less than 10 lakhs, and if the loss is between 10 lakh to 50 lakh, they can mention to they can uh, ask request for CCIT or PCCIT, Chief Commissioner of Income Tax, Principal Chief Commissioner of Income Tax. And if it is more than 50 lakhs, they should directly go to CBDT, Central Board of Direct Tax. And you may think that why loss return has given much preference, why some losses are need to be can be carried forward even though it is not filed within the due date, and some losses cannot be carried forward if it is not if it is not filed within due date. We all Indians are very much clever that uh, during the time we think so much. For example, a person is loss is 30 lakhs. Actually, his loss is 30 lakhs, and he's thinking that I have to avoid the tax. He simply avoided, but he want to show much more losses. So as time thinks, he just manipulates the figures. So CBD, income tax says that if we give much time to the assessee, he will do much more manipulation. That's why if any loss is there, you need to mention before 31 July in case of individual. So some losses can be which are manipulated need to be filed before due date. So that's why you can see this PGBP loss can be manipulated and capital gain loss can be manipulated. Not 112A, other than 112A, for example, land acquisition, land sale, that can be manipulated. And owning and maintaining horses also can be manipulated. But house property and unobserved depreciation cannot be manipulated, because unobserved depreciation can be calculated. That cannot be manipulated because uh, f- uh, income tax has total fixed assets, and income tax can know how much depreciation claimed and how much depreciation not claimed. So that's why some losses can be claimed even if it is was filed after the due date. That's it. This is loss return. If you like my video, please subscribe, share, and thank you.